H.R. 758, a bill to require appropriate federal banking agencies to establish a 3-year phase-in period for de novo financial institutions.
Without objection, the bill is considered read and open to amendment at any point. I have an amendment in the nature of a substitute, copies of which have been distributed in advance. The clerk will report the amendment.
Amendment in the nature of a substitute to H.R. 758, offered by Mr. Barr of Kentucky. Strike all after the enacting clause and insert the following. Section 1, short title.
Without objection, the amendment is considered read and will serve as base text for purpose of amendment.
Object. Object to treating the ANS as base text.
The amendment will be treated as a first degree amendment. I now recognize myself for 5 minutes. Since the passage of Dodd-Frank, only 72 new banks have been chartered. In contrast, in the 14 years preceding Dodd-Frank, more than 2,300 banks were formed. Furthermore, according to the FDIC, only 60 new banks have been chartered in the past decade. In contrast, more than 2,000 banks were formed between 1990 and 2008. The result of this almost complete halt of de novo bank formation, along with consolidation stemming from increased compliance costs, ballooning capital requirements, and bank regulators' negative posture on healthy mergers and acquisitions, has been an increase in banking deserts in the United States, specifically in rural areas. These banking deserts have meant that many Americans are pushed out of the reach of the financial system. To better serve families and small businesses in these local communities, it is paramount that we restore dynamism in the system, including through new bank formation and increased competition. What we're talking about are the small community banks that members of this committee on both sides of the aisle for years have said we all support. The Promoting Access to Capital Act takes steps to do exactly that by providing flexibility to promote de novo formation, new bank formation, to provide competition to bigger banks. This legislation provides for a 3-year phase-in period for de novo financial institutions to meet federal capital requirements. It lowers the community bank leverage ratio, or the CBLR, for rural community banks to 8% from 9% during the first 3 years of operation. So just a 1-point reduction as authorized by federal law in S2155. It requires the federal banking agencies to promulgate rules setting the CBLR lower for the first two years of operation to allow a phase-in period. It removes some restrictions to allow federal savings associations to make agricultural loans, removes the ag loan concentration limit, requires the federal banking agencies to conduct a joint study on trends in de novo financial institutions as well. Additionally, the study included in this legislation was a result of bipartisanship between my Democratic colleagues and myself. Community banks are a key source of capital for individuals, homeowners, and small businesses. Community banks, small community banks, are the key source for new business formation and entrepreneurship in this country. They are the pillars of their community, and they can meaningfully contribute to the economic prosperity of our country, especially in areas where they operate. And these community banks are critically important in rural and underserved areas. So bottom line, we need more community banks. And that means more de novo bank formation to keep this important segment of the banking sector prospering and ready to serve Americans in urban and rural areas. This is something that members of this committee on both sides of the aisle have professed for years to support. Small community banks. This vote is going to be a test about whether or not the rhetoric actually matches the voting record. Do you truly support small community banks, or do you not? This bill will create the record to decide whether or not members of this committee actually support community banks. And I would argue further, for financial stability, the key source of strength of our financial system is its diversity. If you are a critic of too big to fail banks, if you don't like large banks, Why would you oppose creating more competition in the banking sector? This bill gives members the opportunity to vote in favor of more competition, more new bank formation. And to the extent healthy mergers need to happen because of distress in the mid-size or regional banking sector, if there is going to be consolidation because of various pressures in commercial real estate or because of interest rate risk or because of technological investment requirements, this is the way to backfill, to provide more diversity into the system with new bank formation in the form of de novo charters. With that, I urge my colleagues to support this legislation, support new bank formation, support providing financial services to banking deserts, to underserved parts of our country, so that Americans can achieve the American dream. And with that, I yield back. Is there further debate? Are there any amendments or further debate?
There is further debate on this legislation, so I strike the last word.
The ranking member is recognized for what purpose?
To strike the last word.
The gentlelady is recognized.
Thank you very much. I'd like a colloquy with the chair about this legislation. I am very interested in the expansion and development of what is being termed as novo banks, because what we find with the minority banks is we've lost a lot, and oftentimes that is referred to as, we have the larger banks who want a merger, and so it is not completely a loss, but we support the merger. What I want to create with you this conversation about what are you doing relative to perhaps opening up an opportunity for these so-called novo banks to fail because of some new capital requirement, that lack of capital requirement that you're requiring?
Will the gentlelady yield?
Yes, I do.
Thank you for the question. Good question. Very good question. And we have engaged with the state bank supervisors, other regulators about this very question. First of all, I would say that the lower capital requirements for a brand new bank is specifically authorized, and we're not saying no to new capital, but we're providing that at the lower bound that is already authorized under law. Second, it stands to reason that you would have lower levels of capital when you just get started, so that you have time to build up the capital. You can't get more capital unless you start somewhere. That's what this is. Third, the reason why there's not a lot of de novo charters right now, new bank formation, is because the initial capital is so burdensome, it precludes the ability of new bank formation.
Well, the gentleman yield. Now, you can't have it both ways, and I'm trying to find out whether or not you reduce the amount of capital that is needed, or they will start right where capital is required. Which is it?
So the gentlelady yield?
I yield.
So what we do is we tailor the capital requirements. There's a phase in. At the end of the 3 years, they have to be well capitalized. They have to get there. But you have to give them an on-ramp. This is an on-ramp to start. One of the major impediments for new bank formation is that you basically give them the same requirements at the day one as incumbent banks. This allows them to phase up, and if they don't get there, they don't get there, and they lose their charter. But I would say, let me submit one other major point. The gentlelady raises a very legitimate issue, and that is safety and soundness. We don't want more bank failures. But by the very nature of what these institutions are, they're de novo charters, they're brand new banks, they're tiny little infant banks.
Will the gentleman yield?
It is the exact opposite of
gentleman yield?
systemically important banks.
Will the gentleman yield?
Yes, I will.
During COVID, we had something called PPP, and it helped our minority banks, it helped our small businesses so very much. If there was a way by which we could help our new banks that you're advocating for and I'm advocating for, by doing something similar to PPP with an on-ramp appropriation of some kind to ensure that they don't fail early on in the first 3 years. Would you give some consideration to supporting that? Because I want to help these small banks get started.
Will the gentlelady yield?
Yes.
I'm not sure exactly what she's proposing a PPP for banks, but what I would just say is this, is that, to reiterate, these are the exact opposite of systemically important institutions. There are going to be failures of small banks, and they may be acquired through healthy mergers. But the idea is the regulatory barriers, the barriers to entry are so high that we don't see the kind of dynamic new bank formation activity that is required for a healthy banking system that provides the very competition that we want to larger institutions. So that's why we support this on-ramp. If any of these banks were not to get to the capital that they are required to get to after 3 years, or if there were bank failures, the good news is these are such small banks that they don't pose any systemic risk to the system whatsoever.
Reclaiming my time, I'm going to postpone my amendment and have further conversation with you. With that, I yield back.
Gentlelady yields back.